Hi, this is Acme with the US stock highlights here on Share Talk for Wednesday, the 2nd of December. Starting off with Aker's Biosciences, but it looks like we've had a decent basing formation on the daily chart since, I suppose, September. We had the false alarm, false dawn move there in the middle of November through the 50-day moving average, but higher prices or higher lows since then, and also not filling the gap down to $1.74, which is helpful. The view at this stage is at an end-of-day close above the 50-day moving average at current levels, around $2.03. Should be enough on this occasion to give us a retest of the 200-day moving average area at $3.20 over the next few weeks, maybe the end of the month. Stop loss back below the gap floor there at $1.74. That was from November. On to the next situation, which is one that I don't think we've looked at before. Here we have Catb Pharmaceuticals. Always good to see a pharma stock, especially these days. The sort of technical clue here is provided by the floor of the gap down that we had in October. The high on that day was $1.88, while we're above $1.88 on an end-of-day close basis, looking for the 50-day moving average at $3.68. Hopefully as soon as the end of this month, and then after that on a 1 to 2 month view, up to the 200-day moving average and the top of the gap through $5. On to the next stock, which we have looked at before, and one that is looking quite interesting, Kingsway Financial Services. Here we've had a gap higher to one of the previous resistance lines targets that we were looking for, around $3.70, so that's a tick there, that line there from basically May last year. End of day close through $3.70 should hopefully give us a new leg to the upside, and that would be through towards $5.40, which is a late April resistance line projection. Hopefully we could see that by the end of next month, i.e. January. At this stage, only really back below that last peak there at $3.36 from September, really delaying the upside scenario. So reasonable risk reward there as well for this situation. On to a stock with another pharma stock situation, which is broken out. Here we had resistance for Mack Pharmaceuticals, August resistance of $4.75. End of day close above that level should be enough to take us or start the journey towards the top of the rising trend channel from November last year, currently pointing up towards $7.50. That would hopefully be seen over the next 1 to 2 months, and this stage only really back below neckline resistance, let's call it the $4.10 area, really delaying the upside scenario. So looking quite encouraging, especially given the way that both the 50-day and 200-day moving averages are now rising in parallel. Next up, a curiously named company, but one which has its bullish credentials in place, Nxtd, and here we've broken and gapped through a line of resistance from July, that line and the 200-day moving average around the 41 cents level, and while we're above that, looking forward hopefully to a top of September price channel target as high as 97 cents. Time frame on that the next 1 to 2 months, and I suppose at this stage only really back below 41 cents, really delaying the upside scenario for Nxtd. Onto a stock which is also a relatively rare stock to appear on this in this video, Naov, which has gapped through the 200-day moving average. I suppose we've had quite a few spikes through the 200-day line, so it's worth being cautious about this situation. The last high on the way down was $1.48, so an end-of-day close above $1.48 is what we're looking for today to open up the prospect of a $3.50 target, which would be the sort of post-summer spikes that we've had for the share. So reasonable risk reward if we can stay above $1.48, and especially if we can stay above the 200-day moving average around the $1.60 level. Time frame on the upside, the usual 1 to 2 months for that particular stock. Next up, a stock which is a request, Neo, which has obviously had a stellar run over the last few months. What's interesting today is the way that the shares have recovered quite sharply. Well, they're still down, but they've recovered quite sharply from the initial dip. The dip was down to $38, which has actually almost coincided perfectly with the floor of the rising trend channel that was drawn here on the daily chart before. That one from June. So at this stage, while we're above $38, looking for progress within the channel towards $70. So that's the sort of the big picture target. If you're trying to get more sort of tuned in on the price action, ideally we'd want to see an end of day close back above yesterday's low at $44.05, just to cement the idea that there is a potential lasting recovery here, and we haven't actually topped out. So $38 and $44 currently the support levels in play for NEO. On to stock which I'm sure we're all familiar with, Pfizer. I think there was a recent exit by the CEO, or one of the top people of the company. Maybe he should have stayed in. But we've gapped up very sharply in the last couple of days as the joy and the merit of COVID vaccines has clearly sunk in. Interesting, I suppose, that before the rally that we've had over the last few weeks, we did actually have a bear trap below the $33 area. So that was a technical trap there for the shares. Current view is that while we're above the initial November resistance at $39.80, on an end of day close basis, we could hit the top of the old September trend channel from last year, currently pointing towards $46, and hopefully that could be seen as soon as the end of this month. Just a couple of stocks to go now, not quite as famous as Pfizer, but you never know, they might get there in the future. Sequential Brands Group, here we've got extended basing, which is the sort of thing we like, also a broadening triangle, which we also like, and then of late we've had a gap through the 200-day moving average, currently at $7.33, which is another plus point. In fact, we've had another gap to the upside today. The view at this stage is that at least while we're above the $10.65 level, or we can get an end of day close above $10.65 today, we're looking for further upside, hopefully towards $20 over the next month or so. Stop loss, the best one is probably just back below, back at the low of yesterday's session, which is $9.30. So that's as that was a pretty blatant bear trap for the stock. But above $10.65 on an end of day close, looking pretty strong for Sequential Brands. Finishing off with a stock which is on the New York Stock Exchange, but sounds rather Welsh, Sqbg Corporation. Here we've had a massive gap to the upside, although there was the hint of a breakout with the consecutive days above the 200-day moving average over preceding days, i.e. last week. And so that 200-day line currently at $16, around the $16 level. But it's all about now really the floor of the gap down from February, around $19.40. While we're above that, looking for a top of November 2019 price channel target as high as $27.50. So the ideal scenario is that today we close well above the $20 level. That's it from me today. More updates tomorrow.